Hi, Steve here again with another video for you. This video is going to talk about trading in the money contracts at Nadex. However, this is going to be the put, the sell side of things. So we're going to trade in the money contracts by shorting the market. So you're in the money. That way, again, if you want to sign up for the YouTube video subscription. Mr. Binary Options is my ID at YouTube. Again, if you want any of my systems, mysimpletradingsystems.com. Alright, let's go ahead. Again, Nadex is open in over 40 countries. So let's go ahead and place a trade. Again, this is going to be a sell or a short position. Again, this is in the money contracts, so we're going to be buying in the money. Again, at Nadex, this particular video, I'm going to deal with indices. So I'm going to do the indices binaries, and I'm going to focus on the US 500, and this will be the 8 to 10 a.m. range. Again, these are just random times, not particular systems or signals, just random things just to show you the trades. So this again is the US 500, which stands for the S&P 500 futures. We're going to do an in-the-money contract, and on a sell position or short position, that means you're going to be selling a position that's higher than the market. So you can see the indicative price, or the price of the index right now is 2093 and change. I'm going to look at the one here, the 2096. So this is about just under 3 points in the money, and this particular contract will end in 36 minutes. So the pricing is going to be based on how much time is left and how much in the money you are. So for example, if I go up to the 2099, that's almost 6 points in the money. I would have to pay $95 for that. However, if I switch over to the daily position, that 2097 area, this has almost 7 hours to go, and I'd only be paying about $70 for that same type of contract. So when you're trading binary options, it's based on how much time is left plus how much time how far in the money or out of the money you are. So going back to my example, the 8 to 10 range, again about 35 minutes left. The market's at 2093 and change. I'm looking to trade the 2096. So in this particular case, again, it's almost 3 points in the money. If I click on this, I click on the red side, it automatically pops up for the sell side. I can enter in my size. Again, I suggest trading the same size that you would trade in a regular account. For this, just for sake of ease, I'm going to put size of 1, but in this particular case you could have 50 or whatever you wanted. Current market's at 22.25. I'm going to hit place order, and that should fill me, and it did. And it filled me again at 22.80, 22.25. I forgot to show you though. Let me show you it again. Let me place that trade again, because this is what you need to look for. Right here, even though it says 22, again, everything is going to expire at $100 or $0. So if I was buying this particular contract, it would be out of the money contract, and it would have cost me $27.50. Okay, when I'm selling it, in this particular case, again, it's $22. But if you look down below here, whenever you're selling a particular contract, the easiest way to look at it is look at the max loss. That is how much is going to be taken out of your account. So in this particular case, the market's at 21.75. My price is 22. So the max loss is $78. If I change this to say 40, my max loss is $60. I wouldn't be filled right now because the market's only at 22, and I'm trying to sell it for 40. But that's how that works. So if I had $10 in there, my max loss would be $90. That means they're taking $90 out of my account, and my max profit will be $10. So that's something to think about and consider as you're selling at Nadex, and you're doing in the money contract. So in my particular example, again, I sold it for $22.25, which is basically $78, $77.75 is what it cost me to get into this particular trade. And again, my trade expires at 10 a.m., which is 32 minutes left in the trade. Again, my contract says as long as it's below, so what I'm selling, it means I don't think it's going to close above this number. So when you're selling it, you're saying, I don't believe that this statement here is true. So this statement says the S&P 500 will be greater than 2096. So when you're selling it, you're basically saying, I don't believe this is true. That's the easiest way that I suggest to think about it. So when you're selling it, you don't believe this is true. When you're buying it, if this said +1, that means you do think that is true. So in this particular case, again, I'm selling it. Cost me $78. 2096. Again, the market is at 2093 and change. So I'm in the money by about 3 points. So as long as the market doesn't go up over 3 points from here until 10 o'clock. Now it can go up to 2097 as long as at 10 a.m. it's not above 2096. So obviously the pricing is going to change and so forth as the market moves. So that is the trade. So this particular and if I scroll this over a little bit, it'll tell you my position value. So this particular contract right now is worth $71.50. Again, however, if you add that to the -6, that means I actually paid $77 and change for this particular contract. So if I exited the position right now, I would lose, even though my particular trade is in the money right now. The way that I traded this trade is in the money, meaning I'm paying a premium because I'm okay paying a premium. I think the market is going to go down, but it might not go down. I just don't think it's going to go all the way up to 2096. So I could trade the 2093, for example, here, and that's basically right at the money. That's basically right where the market is, 2093, and I'd pay $50 for that particular contract, and if it wins, I'll win 100% return on investment. In my particular case, I'd win, $22 out of a $78 investment. Now, currently, the market is going against me in this example. Again, this wasn't a trade or a signal or anything. It's just more just to show you. The market just opened. It's 9:30, so I expected some type of movement. That's why I took this particular S&P trade. So the thing is, you can exit this position too. Say, okay, I don't want to take more than a $20-some-odd loss. You could exit this position right here, place order, and you'd be out. The other thing to do is you can say, okay, I'm going to exit the position, but I want to profit on it. I want to get out on this particular trade, and I want to get out at. I'm willing to resell this position at $5. So if I go over back to my working orders here at the top, you can see that I have a trade working at $5. So again, it cost me it cost me $78 to get in. So I would have about a $17 profit on that particular trade. I'm going to go ahead and cancel that. Oops. I'm going to delete that. And again, you can see that the market's at 2095 now. Say, okay, if this thing crosses over 2096, I don't believe that this is going to hold. I think it's going to continue higher. You can continue to monitor this. If it closes above or it gets above that 2096 area, you can exit your position right away. We're getting pretty close, so let's use that as our benchmark here in this particular video. And say, okay, if it crosses that 2096 area, I'm going to bail and just take my loss, and that way I don't have to take a full loss. So in this particular case, it costs me $78 to get in. but it doesn't mean I have to risk all $78. If I wanted to bail early, I can. If I exit the position right here, I only lost $27. So I didn't lose the full 78, I just lost the $27 at this particular time. And the other thing is you can monitor as well if, again, this is only a 30 some odd minute trade, and if it continues lower, you can take it at that point as well. But it didn't cross the 2096 area, and I don't want to run this video forever, so let's just assume it does cross the 2096 area, and as I say, okay, I want to exit this position, I want to limit my loss, and I just click on the open position area, click on the contract, and current market's at 44. I can move that to, say, a limit of 50 just in case the market pops on me, and click it, and it's actually going to fill me at whatever the current market was. So the market was at 44.50, so even though I had 50 on there, it filled me at 44.50. So what is it, 44.50? So I lost 20 some odd dollars on this particular contract, but I'm out of the contract. Just crossed 96 now. I have no more risk in this particular contract, so instead of losing the whole 78, I only lost the 20 some odd dollars in this particular instance. The reason for these videos isn't to give you a particular way to trade, it's just to kind of show you that there's a lot of different ways to trade Nadex. You have to find out what's most comfortable for you and the way that you want to trade. There is no one size fits all in trading. Whether it's my signals or systems or anything else, they're not necessarily right for every single person. So find out what works for you. Maybe in the money stuff is right for you. Maybe right at the money stuff is right for you. Maybe out of the money stuff is right for you. Maybe hedge kind of trades are right for you. Decide what's right for you. Figure it out. Do a lot of demo trading. If you need help, feel free to contact me. My contact and websites are in this video. So I wish you the best in your trading. Take a look at the other videos on Nadex. We're going to be doing some out of the money contracts as well, and we'll do some at the money contracts also. So take care.